So Fresh Invest, we help entrepreneurs who are raising investment to get investor ready and meet investors. I'm the director and founder, and joining me today is a panel of three. So Sara, would you like to introduce yourself, tell us who you are and what you do, please?
Yeah, I'm happy to. Hi, Finlay, and hi, everyone. Thanks for having me on. So I am the co-founder and CEO of Canary. We are a software platform that help early stage companies manage their future finances. So that means forecasting, financial modeling, in particular for those of you who are fundraising, so you can get investor ready.
That's brilliant. Thanks. And we're going to hear a little bit more as we get through the presentation from the panel. John, over to you.
Thank you. Yeah, I've been a public speaking coach here in the San Francisco Bay Area for the last 25 years. So I've been working with mostly public speakers, singers, and sales and marketing professionals, and helping people give great presentations. So some of the highlights of my career were coaching a student who became the international president of Toastmasters. And I also had the honor of working as an associate of Seth Riggs. He had 120 of his students win Grammys. So there's a certain mindset that you have to get into if you're gonna speak to a large audience or give a video presentation. So I've been working with Ruggero, and we've been doing weekly presentations for founders and training them on giving their pitch over video. So it's great to be here. Thank you, Finlay. And we'll move on.
Thank you, John. Ruggero, over to you.
Yeah, hi everyone, I'm Ruggero. I'm a writer director based in London, UK. I trained as an actor myself and worked professionally as an actor for 4 years, and then I transitioned into writing and directing specifically. I've worked with over 600 actors to date, and I also teach screen acting for actors. So basically I teach actors how to adapt their acting, their performance for the camera. And since the first lockdown started, I've been working with John, training business people in general and founders specifically on how to be really effective on camera. And that's why I'm here.
Okay, brilliant. And listen, a big thank you to the panel for joining us. And it'll become clearer that, we are a remote team. So we were just chatting before we started this formal part of the broadcast. And how we can pull teams together and how we can pull events like this. But I engaged with quite a number of people before this, and we were calling it, it's not just a webinar, but it's a masterclass. So I really want to, share and everyone to share their ideas as much as possible. So please do that via the chat. We may get the opportunity towards the end. I know I certainly don't have to dash off, and it may look a little bit more like a networking session at that point, where we can exchange some views. So don't feel that you just have to sit and listen. We're gonna hear from the panel in a little bit more detail about their areas of expertise, and we're gonna do that in two parts. So what we wanted to answer the question is how to attract investors and raise investment. So what we're going to do is, firstly, try and answer that question now. Say we've only got an hour or so we can't get into great depth here. So it's going to be the ideas, and we're all absolutely open for you to, make contact with us afterwards. We'd love you to do that. And so then the second part is, what skills are you going to need? What tools are you going to need? And how can we help? And we'll outline that hopefully in the second part. So I'm going to kick off with some of my ideas now. A little bit of my background. I'm quite entrepreneurial. I set up my first business way back in 1996. If you can believe that, I can hardly believe that myself. So I've got a big, nice anniversary this year of that. And then I actually went into an employed role to do this, to to formally train people, and had a fair deal of success in matching people and for them to actually raise investment. So I feel that I can now share that. Now we know if you're going to raise investment, that there's a classic package of documents. There's a process that we need to follow, and obviously we could go through that. But I think what's more important is to look at some larger themes that sit in behind that kind of answer that question: what are investors looking for? So I've actually got 5. Here's 4 for you, and then I've got kind of what I think is the secret sauce. So let's unpack those. So I like to talk about opportunity. You know, a lot of people start their pitch deck with problem, and you know, don't get me wrong, I love problem solution, but I think this is much more positive, and I think that's really what investors are looking for, is an opportunity. Right, you're solving a problem to create that opportunity. I get that, and this is where you have to talk about the market size, the market opportunity. Now, I just point out one mistake that I see a lot of people make, because they talk about the global billion, multi-zillion pound market, and then it's like, really, let's have the reality check. So while you talk about the big market, you know, make sure you chunk down to your available market, but also what you can genuinely exploit with your resources. Don't be frightened to talk about the competition in this space. And then if you can show real clear blue water, then that is where the opportunity lies. Innovation. We need to have something to be able to differentiate from the competition, don't we? Now, but don't worry if yours is not a complete blue sky new technology. Okay, so there's a spectrum of innovation, isn't there? From that, you know, the white coats in the laboratory, something that has been invented, to some improvement in process or business model, or an adaptation of technology, or a new use of technology. But what investors really want to see in this space, in innovation, in my opinion, is that they want to see some level of protection. So again, that doesn't have to be a patent. We know that to be able to protect stuff with a patent is really difficult. But what is your moat? What level of protection have you got? So is it the software, or is it the process, some sort of secret sauce recipe? Is it your team and their knowledge? So talking of team, that falls under resources. We know that investors invest in people, right? So that team is highly important as a collective, as well as the individuals, their skills, their experience, yes, their qualifications, but also the cash, you know, the finance element of it, and what have you brought to the table? And that can be in grants and loans as well as hard cash. But the phrase that we often hear is, how much skin have you got in the game? You know, if you go asking for $250,000, how much have you brought to the table? And also the runway, how much cash have you got? How much are you spending, your burn rate, and how much have you got left? Please don't go too late to investors, you know, when it's all gone, or it's going to be gone very soon. You know, give yourself 3 months, 6 months, and they know that then you're coming at it with strong resources in a strong position. And what still needs built? What is the cash going to be used for, the fresh money? Where are you in terms of your development? What do you already own? And the return. I think most people get that this is what the investors are coming for. So it's money in, money out. Roughly speaking, they're going to try and identify 10x returns. So 100,000 in comes back out at £1 million over 3 years, maybe 5 years if they're having to be patient. So you need to be able to show that, but Sara will be able to pick up on some of these smaller unit economics, but they're the building blocks to show how that happens over 3 and 5 years. So month by month, those figures show how the growth of the capital actually happens. Now, this is all totally interdependent. Hopefully you'll see how those themes stick together. And this is my much softer one. Don't forget that investors are human and there's an emotional element at play here. Now, all of this is about communicating, isn't it? You know, John, Ruggero and Sara are all communicators. And this is maybe a little bit more implicit, but genuinely, I believe that your purpose is really important and it connects with the investors. You know, your vision, how are you going to change the world, or how would the world be a better place with your technology? And the characteristics of your brand, but also your team and you as individuals. So, you know, I would say don't let the emotion and those softer elements be hidden behind too much of the purely financial and economic story. So there's some of my thinking, and I would just like to ask that question to the panel. So I'll need to stop sharing my screen, and John, you can maybe give us some of your thoughts.
Thanks, Finlay. Yeah, so, you know, coming from a public speaking standpoint, you know, what makes a great pitch? How do we really engage our audience? And so I have 3 things for you. Start with a powerful hook. Really focus on clear, concise communication. And then, you know, work to the point of getting people excited about what you're talking about. We have to transfer our enthusiasm to our listener. So what is a powerful hook? I think about Steve Jobs. He's created the iPod, and he says 30,000 words in your pocket. So, okay, I'm blown away by that. I think I want that. Of course, we're not always going to be able to get to that level of power with our hooks, but a hook should be something that you start with. It's short. It creates some sense of mystique, surprise, and it evokes the imagination. So Quang Pham, he has a company called Jump Cut. He raised $2 million with this pitch, and he started by saying, "We make online courses that feel like movies." So he really built an amazing presentation by boiling it on down to a powerful hook. Beyond that, clear, concise communication, it takes a bit of work. I remember talking to my student who became the international president of Toastmasters, and I asked him about a particular speech that I had watched. And I said, "Michael, how did Sara do such a great job communicating emotion?" And he said, "John, she gave that speech 350 times. Like, wow, that's a lot of work. So we probably don't need to go to that extreme in order to create a pitch, but you want to work on it and you want to do it again and again. Michael Siebel, the CEO of Y Combinator, gave a great interview recently. He talked about, you know, what separates the top 10% of founders who raise capital. And his main point was communication. He said, the best founders can explain exactly what their business does in 1 or 2 sentences. So for you as a founder, you want to be great at communicating with your investors, with your co-founders, and with your users. So with all that and with that preparation, it allows you to talk to everybody about your business with enthusiasm. So you can build excitement because of that preparation that you've poured into your communication strategy. So thank you.
Thanks, Sean. That was really nice and you know, not surprisingly well communicated. Thank you very much. Sara, how would you answer that question? What do you think investors are looking for?
Let me pop up my screen here. So naturally, we are coming from the financial perspective of raising funding. So slightly different from the pitch element, but I think there's a lot of things that we see as well. My own story is that I actually don't have a financial background. Everything I know about numbers is learning by doing, and Canary happens to be my third company. But my co-founders have financial backgrounds, and that's why we sort of created Canary. But what we see with the founders that we work with is that there is this almost anxiety around working with numbers. I don't know how many of you guys are sort of pulling your hair out when you open an Excel spreadsheet. That's how I feel until we built Canary. And so my co-founder, Andre, who's worked in finance for a long time, he gave me a really good quote that I want to share with you guys, which is, "It's better to be approximately right than precisely wrong," which is a quote from Warren Buffett. And what I mean by that is when you prepare your forecasts or you prepare your financials for going into pitch meetings to investors, a lot of founders are really worried about not being perfect and not being accurate. And what I want to try and say with this is that none of the investors that you're speaking to expect you to be able to predict the future. What they really want to hear is that you can tell a story with numbers. So once you've perfected that pitch and your pitch deck and you have your vision and you know how to communicate that, you have to have the numbers to back that up. Of course, you need to know your numbers well. And I think as a CEO, if you can communicate that really well, it also means that you increase your credibility as a CEO. Concretely, we have sort of gathered some of the most common questions that you could be asked by investors, ranging from overall, what is your pricing strategy? What is your burn rate, as Finlay said, but also more in detail, what is your MRR? What does your unit economics look like? So the more time you spend on this, just like you spend time perfecting your pitch, the better you will be in terms of raising investment. Yeah.
That's great. Very, very nicely put. Thank you very much. I'll just jump back on. Hopefully you're not getting too travel sick from us swapping screens and so on here. There we go. Okay, so thanks for that, and you know I really love that there's these kind of deep dives into those areas of expertise. That you know there's no question, Sara, that when you're having this conversation, we do keep on coming back to the numbers, right? You know, it's a numbers game, but I love your story and where you've got to from this. And you know, not wanting to digress too much, but there's a couple of people on the call I worked with when we actually set up an incubator accelerator for creative industries. And I think, you know, not wanting to generalize too much, you know, highly creative people are almost furthest away from the numbers as you can possibly get. And, you know, we did quite a lot of work in helping people do that. Now, this is not just a pure promo for you, but I've got some clients working on Canary just now, and it really is a great way of doing it. And actually, it creates beautiful output as well. You know, it's really quite artistic in the output. So I think that's great. And yeah, I love that Warren Buffett quote. And it's like, don't be scared. Let's get something down on paper. Let's get going. You know, I think you're right. People want to sit back too long from it.
And I think the important point is also to iterate your model, right? It's not a static document. It's not like I've done my model and then I'm never going to look at it again. We update our own model probably once a week, if not every 2 weeks. So that's an important point as well.
Yeah, no, brilliant. Thanks for that. So we kind of flick over a little bit into, okay, well, if we've got an idea of the types of questions, and they were nice, it's very specific questions, Sara, and you know, the broader themes of what people want to do. Well, let's have a look to see how we could do that. What skills and tools can we help you with? So. Don't worry, this isn't going to turn into a sales pitch right now. We're just going to tell you a little bit about the packages and how what it looks like. I'm mindful that there are people on the call who are right in the middle of this just now. There's people who are raising. There's people who have raised from angels, from crowdfunding. A good question from Andrew. You know, we're kind of talking here about seed, pre-seeds, which is really going to be angel, high net worth, moving up to VC, but that's kind of where we are. Not to say we can't go above that. Okay, so you know, if these guys have got any other questions or input, or even if you're disagreeing with anything we say, I'm quite happy for those views to come forward. So let's look at what there is available then. So Fresh Invest, we've got like 3 areas: coaching. And we actually then run pitching events, and we can make introductions to the high net worth and the angel syndicates or individual angels. And what you're looking at today, us, the 4 of us are a coaching team, if you like. So I can pull on the expertise of John Ruggero for their specific area, and obviously we can help people get signed up to Canary, but also help them. But it's important to note, and Sara will point this out, that there is some advisory within that as well. So that hopefully gives an idea of how we're working together. And John and Ruggero, very much a double act. And Ruggero, maybe you want to just share a little bit more about what you guys actually do at a practical level.
Absolutely, absolutely. So if you don't mind, I'd like to share a little presentation myself. So what John and I do, what we focus on is this: it's how to be engaging through the lens, okay? Because as of right now, live meetings are not really happening. Everything happens online. But giving a great presentation after you've done all your work, all your research, all the numbers and stuff, and you need to actually talk to people, doing it online is different. There are more opportunities. There are videos, there are live Zoom things like we're doing now, but it is different, okay? So in order to be effective about this, the first question we like to ask is, how does it feel when you're watching someone and on the screen and they're doing a great job at presenting something? Think, you know, a YouTube cooking video, or, you know, whatever, imagine something that you like, and how does it make you feel as an audience member? How do they come across? Well, if they know what they're doing, they come across as friendly and engaging and personal, right? Now, this in turn creates a reaction in us, the audience, and it makes us feel relaxed, makes us feel interested, and again, most importantly, it makes us feel personally addressed. Why do I stress this? Because the main difference on camera is that it's a much more personal space, and this might sound weird, but those who do it well manage to create a one-to-one relationship with your audience. What does that mean? It means that anybody who watches your video or your live Zoom presentation, for example, if you do it right, they will feel as if you're talking just to them. And this makes it extremely powerful if you know how to use it right. The tricky part, however, is that the creator experience is completely different than the end user. So when you are there recording your video and you look into the cold eye of the camera, it's extremely intimidating, right? So how do you do this, right? Well, what John and I have found is a series of exercises and processes to help people. And the main thing, I think, is to shift their perspective. Okay. What we found is that most of the time when people start off on camera, they tend to become very rigid and kind of official. They feel like they have to address the nation, if you like. And that's a mistake. You don't want to address the nation, okay? It's almost the opposite. It's almost as if you were talking to your best friend. Now, obviously, you're not talking to your best friend, so you need to find the right balance between being warm and nice, but also being professional. So what we like to do is basically coach individually and help people refine their messaging, refine their camera techniques, with always the end in mind. So always looking at how does your audience, so the investors that you want to connect with, how will they feel, how will they react to your performance on the screen? Okay, so that is what we do, that is what we are here for. So thank you very much, Finlay. That is me done.
Thank you very much. And that was mildly unusual to have Queen Elizabeth staring at me there, but it certainly worked. Thank you very much. And that hopefully gives people an overall picture how we've been able to pull together a team with different specialities, very international team as it turns out to be. So we're at the disposal of people here. So please get in touch with us as individuals, and we can we can then signpost to anyone within the team. Now, maybe I should just have handed straight over to Sara there. Sara, would you like to give us a little bit more, maybe technical within your area, some more detail, please?
Sure, I can. I do have a few slides if you'll allow me to share.
Yep, up you go. Yeah, put them up. Yes, please.
Great. Okay, there we go. So I think Finlay already kind of sold the product for you guys, but I just wanted to explain what we can actually do, hopefully not being too salesy. But essentially, if you do sign up with Canary, what we can help you do is to build your financial model. So that means that you become investment ready. What we do that's different from what you could do in Excel is that we have an intelligence layer on top that actually analyzes the numbers you put in. So based on what we know investors would like to see in your type of industry, at the stage you're at, we will sort of give you little red flags or little nudges on how you can improve your model. And as you can see, it's quite visual for those of us who don't like to look at a big, complicated spreadsheet. It's fairly quick to understand what is your runway, what is your burn rate, and so on and so forth. You can export, collaborate with your team or advisors if you're working with Finlay or someone else. And I think I asked one of our customers the other day, and I asked him, what is the best thing about Canary? And he said, well, there are no broken Excel formulas. So if you hate broken Excel formulas as much as I do, then it's definitely a product for you. If you're not ready to sign up, I would encourage you to go and have a look at a cheat sheet that we prepared. It's under canary.co/downloads, and it's just 8 bullet points to make sure that you have the basics covered in terms of getting your financials ready for investment. There are also the questions that I shared before. So go and download that. It's totally free. Yeah, and obviously reach out if there's any other questions.
Thank you very much, Sara. And yeah, again, I'm using this, and it is neat as well, as you say, as an advisor, and some people may well be advising as well, how that just works really, really quite nicely. And we're urging people to get on there, and it works. It's nice. And I think what you've done so well is that you've almost started at the same starting point as us to say what questions are investors going to ask, rather than sort of blindly just creating, balance sheet, profit and loss,
Yeah.
and going, that's financial information, isn't it? It's like, well, it's not really actually what,
Exactly.
managers, for one thing, and I love how
Yeah.
you position yourself so that you're pre-CFO, once
Yeah.
you've got your CFO, financial director, whatever, then okay, they will take that on from you. But as
Yeah.
very, very busy CEOs and founders, whatever. So
Exactly.
it's
Thank
great.
you.
So,
Thank you.
so thanks for that. Now there's questions coming in here, but what I'm realizing is that some are going to be answered just as we sort of move and change direction a little bit as well. But ping them directly to panelists or all panelists if you're wanting those answered. So let me just go back to my final slides, and then we can see if there's any, just to run a Q&A session. So thanks, Sara, for that. So maybe if I can just take a minute to broaden the toolkit out a little bit. And when we engaged with some of you beforehand, one of the areas that we spoke about was valuation. So you're having conversations just now with investors, or you're getting ready to do that, and it's really tricky, especially if you're pre-revenue. There a tool that I'm using and helping founders is Equidam. So it's an online platform for startup valuation. So you can go and plug in the numbers, and you're getting more comfortable using the numbers, and it creates a valuation, but it's also a discussion point, or it's to have kind of grown-up conversation around the valuation. And what these guys have done, Daniel and his team, is that they use a number of different metrics and valuation tools, aggregate it, and then you can share that with investors. So it's kind of rubber stamped, if you like, which I think is really powerful. So happy to introduce you to them, or go on and have a look at that. And we were getting a question there about a term sheet, and you have to know your areas of expertise, don't you? And there comes a point where you go, well, let's get the lawyer's advice on this. But Seed Legals is great. I know a lot of you are already engaged with them. They're doing a lot of work raising their profile and getting out there. Anthony Rose is brilliant. Again, he's been very innovative in this space himself, to create a platform with all the legals to raise finance and motivate your team. So again, I would advise that you engage with them. We're helped to make the introduction, if you like, and support you as you develop that relationship. But very, very helpful stuff. And just coming back to our services, I would love to engage with you, no matter the stage that you're at, and if that's just about a dialogue, you can feed back to us on your experience. We're immersed in this sector, so we just really want to hear about your experiences, share, signpost. This is an amazing network, isn't it? A genuine global network. So we love to put you in touch with people, either investors or other entrepreneurs who have been in that space. We're all really here to try and help each other. If you are interested, obviously, in any of our services as individuals or as a group, let us know. I just wanted to give you a little snapshot of how we use the heart a little bit further in. Don't worry, I'm not going to get deep into technical detail about the equation or other services, but there was a question about culture, so I thought it was pertinent to put this up just now. And you may know that we do a bit of work with our core business, the fresh business that is in the brand strategy space. And what we believe is that small businesses can place a value on their brand And what this does is it helps you get better value for your shares when you're actually raising investment. Now, we know that the big companies, if you're listed on a market, that you can say that this is your company valuation. But even within that, we know that Apple or Nike or Coca-Cola, that there's some value in the intangibles, okay? And often this is brand. So again, we all quote Jobs. I think it was Jobs that said that he would give everything up, but he would keep the brand. And so this equation, we work with people to try and provide a value for your brand. And yes, there's a question about different marketplaces. This is a slightly different context, but yes, it needs adapted. And that's what our C here is, that everything changes depending on the context, the cultural context. Okay, so obviously we've all been in touch as you've booked on here, and I really thank you for taking the time to come and listen to us. We'll follow up. It's not going to be a hard sell. We're just going to follow up so we can help share information or signpost, whatever we need to do. You can find us individually at these websites. Please engage now with a chat. If anyone feels really strongly about sharing views, you can come up and tell us something, or ask us something directly. It's 22 to 2 UK time, so we've got plenty of time for a good Q&A if anyone can hang on and do that. Otherwise, I'll say thank you very much for listening. Now, I'll go through any of these chat. I don't know if there's anything else that the panel want to add as closing remarks.
I just wanted to say thank you to everyone who's been listening. It's been a pleasure being here, and I hope we'll get to work together soon in any capacity. I said no hard sale here. So yeah, thank you so much.
Okay, thanks, Ruggero. We've got some good questions here, but I'll go to you, Sara. I don't know if there's anything else you'd like to add, any emphasis or.
I mean, just to say that we're happy to work with any of you guys. We're a startup ourselves, so if you feel like testing out the product, giving us feedback, we appreciate that, and I'm happy to jump on a call as well and to share my knowledge with any struggles that you might have in fundraising. We're fundraising ourselves right now as well, so we're going through it. We know the pain and joy of fundraising.
I think that's a really nice way to close the loop, isn't it, Sara? You're there yourself just now.
Yes.
So
yeah.
I'm sure people will appreciate that offer. Yeah, thanks.
Absolutely.
John, you get any other further points here? I've got some questions that we maybe pick up, but if you've got anything else to add just now, that would be good.
Thank you, Finlay. Yeah, just on behalf of the US side of the operation, I just want to say thank you for including us. And if any of you just want to run your pitch by us, Ruggero and I are delighted to just take a free look at it, give you our impressions, talk about what we can do to help. And yeah, we're just wanting to have a good time, meet with all of you, and say thank you.
That's a really kind offer, and I really hope that people take you up on that, John, because that's very kind. It's brilliant. We've actually got a service that we call the panel, which we run dummy pitches. I think I mentioned that to you before. I think you've seen that, and it'd be great to get you guys involved in that as well. So there's another little project for us. Listen, I'm going to just pick up on a question here. It's Freddie, and hi Freddie. I actually spoke to Freddie. I think it was last week, and I went off on a bit of a tangent because Freddie's operating in the ski sector, in the clothing sector associated to the ski industry, and so I hope I didn't bore him too much about my 17 winter seasons. That was my first business that I set up. So he did manage to tell me a little bit about his business, but here he is. He's telling us I'm launching a very modern brand, and the majority of investors I'm speaking with are a very different demographic who don't necessarily understand or buy into concepts such as influencer marketing. It's a great point. There's an age thing. I think there's a gender thing as well. To be perfectly true, there's not enough diversity in investor communities, although that is changing. So I can feel it from Freddie's point of view. So ski with a Q, we're challenging the ski industry, our headline marketing strategy, and influencer ski holiday, and some angel investors. But investors struggle to see the potential rewards of this. I guess it's a communication problem. So yeah, there's a challenge there to seek, when we're all trying to seek customers, it's like, well, wait a minute, we've got to try and find customers that resonate with our brand. But if Freddie's been round the houses a little bit and gone, well, it's all old white guys, to be perfectly frank. Sara, I can see you nodding away. What do you think about this problem?
Yeah, I immediately got reminded of, I had a friend who is in sort of femtech, health tech. Basically, it's a fertility app where you can monitor your health as a woman. And she told me that the first time she went to an investment committee to close the round, they had to go to the secretary, who was the only woman in the whole office, to get her feedback on this case. So that's just tells you how difficult sometimes it is to convey what you're doing. So I totally understand that problem. I think what she learned, my friend, and what I've seen other founders do, is that you have to back up everything you say even more with numbers. So if you say this is a problem, but it's a niche industry or an industry that they don't understand, back it up. You can find numbers that say, how big is this problem? Try and quantify it and back up your sort of claims and the opportunity, as Finlay said. It's sadly unfair, but that's just how it is, that you have to work a little bit harder to convince them. But don't be discouraged. Just be aware that you're going into a room where they might be older or don't understand the concept that you're building.
Mm-hmm. Yeah, no, thanks for that and that insight there. Unless anyone's got any other advice for Freddie on that, I'll jump to Graham Duncan's comment. And he's based in Hong Kong, and it's just a question around the different cultures there. John Ruggero, did you have any other thoughts for Freddie and his?
I have a comment for Freddie.
Yeah.
We have a motto that is, don't do it alone. And, when you're stewing with these questions of like, well, you had a talk with some investors and did it go well? I don't know. I think that having a chance to work with people like Finlay and Sara or Ruggero and I, and we just bounce ideas off of, can be very refreshing. Because sometimes you'll say, well, it just didn't connect here. And Finlay might come in and say, oh, well, have you thought about this? And I've seen amazing things emerge in these kinds of, like we call it a sandbox, where you get a chance to play with your idea, bounce it off the walls. And it really kind of helps you build confidence, because at least you've gotten it past the three of us. And that can kind of ease the sense of burden about trying to reach that investor.
Mm-hmm. Thanks, John. Yeah, no, and there's a lot of messages coming in here, but I'm sure Freddie will be grateful of that, and I'll definitely follow up with them afterwards. So Graham, and his question really is, do you adapt culture by culture or market by market? For example, I live in Hong Kong, and I would definitely be inclined to approach a Western person differently than I would a Chinese person. Do you think one model is suitable for all, or do you change it? And I just type very quickly while I was listening to Ruggero earlier, that you know, it's adapted for me. You know, it's think globally, act locally. You know, the same sort of concept, really. So I don't know if anyone else has got any thoughts on that example there.
Well, I think you definitely need to adapt. I would go even further in a way. Like if you can adapt your let's say your pitch, not just to a different culture, but to the person. So the more you know, the more research you can do about the one specific person that you're talking to. So not even the company, but literally that person. I know that sometimes it can be difficult, but the more you find out, the more you adjust, the better the chances that you will connect. Because remember, it's something that Finlay said earlier, I think Sara as well, it's people. It's people invest in people, and people connect to people. So that's it. You know, I mean, the more you find a connection with the person, the bigger the chances that this person might be interested in you and what you're doing. So I would say absolutely, and especially if you're going outside of your own culture, do some serious research about there's a ton of tiny customs or things that can literally make a meeting go sour right away just because you're not used to certain things. I studied Chinese myself. I lived in Beijing for about 2 years. I used to be fluent in Mandarin. I've lost it all now, but whatever. There are some huge differences. Like, for example, I remember Chinese and Japanese people usually are not used to shaking hands. So when they do, they literally give you this really, I don't know, floppy hand, which leaves you a very weird sensation. And it's one of those things that subconsciously can really throw you off. Another thing, they tend to laugh when they're nervous or embarrassed. And this is something that I know, for example, created a lot of issues in schools because teachers thought that the children were laughing in their faces, where actually they were just scared and embarrassed and they didn't understand. So all these kind of small things mean a lot, and they mean a lot even more if you learn a couple of words. If you're talking to someone that is from a different language, learn a couple of words, just simple greetings, learn how they greet each other. It can really go a long way to starting the meeting on the right in the right way. So I would say absolutely, you absolutely need to adjust what you're doing. It's not one size fits all at all. That's my 2 cents worth.
No, it's great, and we're learning more and more about you every minute as well. Hats off to you. You're right, and getting right down to that very, very local level, I totally agree with you. So something like that, you know, right, for me, coming from Scotland, you know, the Chinese culture is obviously, you know, a huge difference, but something a little bit closer to home. I'm working with a client just now, and they've got the potential to engage with Dorset Business Angels. Somebody reached out from Dorset Business Angels, one of the directors, and said, look, would you like to come and talk to us at one of our meetings? And so just at that level, you're right, there's a level of research that you can do about that group. You know, they've got a blog on their website, they've got their portfolio, so they kind of lay out their investor strategy. So when I'm talking about that, the purpose, so you can start to see, well, actually, these guys kind of talk my language, their values are close to mine, and so on. And I think it's Alex that he made a comment to say that investors appreciate if the pitch shows that the fact that you've done some homework and you personalize it. So I think that's picking up on your point again, Ruggero. And another one, Andrew Byers was asking, you know, he was thinking that founders are not inherently investment ready. And that was, maybe I was using the extreme example of, you know, the creative industries who really shy away, in my experience, from numbers. How do you prepare a founder for investment? And I guess this, you know, what we would say is, well, you know, engage a coach. talk to us, because you're right. You're great at what you do. Entrepreneurs, they're great at making or doing what they do. Even to write a business plan, is not really kind of natural behavior for an entrepreneur, right? Okay, and then we're going to take that up to another level and then put you in the spotlight. So all of this, what we're talking about, that is investor readiness support, and it does often feel unnatural. So get some help. But hey, just talk to people that have done it. Freddie's in the middle of it, and Alex has obviously got some experience. So share it. So another question. So Alex, he's obviously got some experience. How important is the geography of a company in investing? Do you expect the company to move in the UK or somewhere else? It's case by case, but from my experience, often if you manage to engage with US investors, right, they're probably going to want to see a US company, okay? And you're probably fairly happy to do that, and they're in a position where they can then help you. Likewise, in the UK, it's a lot easier if it is a UK business. Now, I know there's someone on the call from Malta. Now, there's huge incentives to just now with the Maltese government being very entrepreneurial and so on. And it often comes down to tax incentives. So, for example, in the United Kingdom, for investors, they're highly motivated by the tax system, not to get technical just now, SEIS and EIS, that you can make big savings. But obviously the UK government at that point don't want lots of offshore businesses, right? So they're trying to do it to stimulate the UK economy. So there's maybe other things to be answered there, as to why. It's not necessarily because they want to see you or be able to visit the factory necessarily, but there could be other factors. Sara, you've maybe got some experience in that sort of domain with your own businesses.
Yes, and I think it ties into the last question as well about sort of geography and where you're raising funding. So I'm originally Danish and set up my first company in Denmark, and raising a fund and setting up a company in the Nordics is very different. And now we're obviously based in London, but are speaking to US investors as well. And there is a huge difference in how they approach the investment conversations, what their expectations are. But I would definitely say that the US investors we've been speaking to expect us to have maybe not a US company, but at least some kind of presence. So they're typically asking how many of your customers are US based. And so we haven't been able to focus on the US yet. So it's not really relevant for them because they don't feel they can help. So we have focused our attention on UK investors, because then you can go to them with the same pitch deck, with the same model, and expect the same sort of level of investment and valuation as well. So I think even though you focus globally, be careful of that, because it requires a lot more work and a lot more sort of changing and updating to what you're doing. But that's just my opinion.
Yeah, no, and I would go along with that. I mean, I would say that most markets, if you are to say, right, okay, stay within your own market, then the sort of natural makeup of the market means that there is enough venture capital available in that market, to kind of match wherever you're selling.
Yeah.
And certainly talking about the UK, John's obviously in part of the world that's very, very vibrant. The UK is well enough off. And as it happens, Scotland actually has a disproportionate number of angel groups, for example. But anyway, don't get me started on that. But we've got two more questions, and I think looking at the clock, we could maybe just nail them, and then that lets everyone get back on with their day. This is from Anonymous, but it's about turnover. Do investors generally require a minimum monthly turnover? Sounds like maybe a bit of a bad experience. Instantly said no until we increase our turnover. So, my take on that is it's case by case. You get some people who are open to more risk in that they will invest in pre-revenue or lower turnover. Others, it's just a rule that they say, no, there has to be revenue or profit. And just unfortunately, you're going to have to kiss quite a lot of frogs until you get that right. Someone sees the upside, not just the risk. But again, you can sometimes read into that, so they'll not touch it until there's a higher turnover. But it's not an absolute answer. Sara, you're nodding there as well. You've maybe seen similar examples.
Yeah, I mean, we've heard the same from investors. I think there are two sides to it. One is that every fund or every investor have their mandate to invest. So I would encourage people to look into the funding napkins if you haven't seen that. It's sort of for SaaS e-commerce. I think there are a couple other industries where what does it take to raise a seed round, a Series A, and there are some metrics according to revenue, which isn't the internal truth, but sort of a guideline. And then I think you will always hear strange feedback from investors when they say no, and this is the typical one, because they can always say, we'd like to see more revenue. You will never get a straight no. They will sort of say, come back later, because they don't want to close the door. So, just keep going at it, and don't be discouraged by hearing that from a handful of investors. It's the easiest response for them to give.
And then that'll probably do is I'll just give my comments. It's around many founders are inventors and not necessarily entrepreneurs, and there is quite a difference. You're right. So how do we support founders in articulating and honing the business model? And yeah, no, that's absolutely part of what we do. I think that the best thing I did, or the best example of this, is the jobs to be done. I don't know if anyone's followed Professor Clayton Christensen. He was at Harvard Business School. He died last year. So to ask what is the customer hiring your product or service to do the real job? And I think it, gives real clarity when people think about that. And my other point on that, Andrew, is, inventors aren't entrepreneurs, and that's why investors often like a founding team. So there can be the inventor there, and they're maybe technical or scientific, but maybe there needs to be a slightly more commercial beast or entrepreneurial beast there. And it statistically shows that solo founders are less likely to get investment because you don't have that breadth of experience and skill set. So if you think you're an inventor, I would be, and I think this is advice for lots of founders actually, go and find another partner who's maybe that more commercial beast amongst us, and share the workload. Listen, there's still some quite nice questions coming in, and Armando is asking, what is the best way to contact an investor? That's like, it's the kind of holy grail, isn't it? That direct line in to get the investors. And the actual truth is, it's really difficult. Can you imagine some people that are getting 20 pitch decks on their desk every day? And people are trying all sites. It's coming in from LinkedIn, by email, by snail mail, everything. So it's a combination. Nothing's perfect. So yeah, within reason, keep trying. If you've got to try a combination of everything, would be my advice. Maybe send a video. Yes, I think videos a nice way. We probably should be making more use of it. John and Ruggero could give you some advice on doing that. I'm sure they would love to help. Listen, that's us a little bit past 2 o'clock GMT now. It's probably been our session. As you can tell, I'm really passionate about this. I would love to keep chatting and engaging with you. I'd like to thank everyone for turning up for the questions. I'd really like to thank John, Sara, and Ruggero, the panel. I really enjoyed working with you up to this point and today. Thanks, Sultan, for your support on the side there. And let's keep in touch. Let's keep the conversation going. And hopefully talk to you all soon. Okay.
Thank you, Finlay.
Ready.
Thank you, everyone.
Thanks, Nate.
Thank you very much. See you soon.